Welcome in this new YouTube video where we're gonna talk about this inverse head and shoulders. In the last video we talked about catching the top, and today we're gonna talk about catching the bottom. Okay, so when I see an inverse head and shoulders form on my ES, Nasdaq or whatever the market, I just pay attention every single time because you can play a really nice short squeeze. So let's take a look on the charts and on the screen. So this is just a mirror of the last pattern. So this is just a mirror and the symmetric about these head and shoulders, but at the opposite way. Okay, so the left shoulder, so we have a low plus another bounce. Okay, then we have the head and lower low. Okay, plus stronger bounce. Right there we have a stronger bounce, and then the right shoulder with a higher low. Okay, then the neckline is just connect the two bounce highs, okay, and confirms when price breaks above after the right shoulder. The psychology behind this setup is that sellers pushed to new lows at the head, okay, but couldn't reach that depth on the right shoulder, okay, so right there, and buyer strength building, okay, inside of this setup, inside of this bottom, they are stepping into the market massively. This setup just form an end of down trades, okay, and this is the signals potential reverse to the upside. All right, so why you need to trust the inverse more? Because bottoms form with more fear and capitulation. Okay, when the market is going down, is going more quicker to the downside than to the upside. Okay, so when the pattern completes, the short covering rally can be very powerful, and then all the shorts are trapped below the neckline, okay, and they have to cover and buy at the market, and that's why boom, this move is fueled by a lot of buyers. Okay, let's see at some examples. Right there on this chart we have this left shoulder right there, a deeper move, okay, which is shaping the head, then a bigger bounce right there, then this right shoulder, boom, we are breaking this neckline to the upside, and then massive short squeeze. Okay, but I'm not agree with this neckline. In my opinion, honestly, I would draw a neckline like that. Okay, a neckline like that, and then when we are breaking it over there, bam, very nice and awesome signal to take a long right there, and we have then a massive short squeeze, and this is really nice. And I don't know why they drew this neckline like that, but you need to connect each pullback of the left shoulder and right shoulders all together. Okay, so that's why you have to draw this neckline like that. Let's take a look at another example. So right there, boom, okay, bearish trend, this is the pole, okay, then left shoulder, head, right shoulder, boom, neckline, which is connect the both pullback of the left and right shoulder. We are breaking it right there. This neckline, great long opportunity right there. We are doing even a pullback, a retest on this neckline, and then massive short squeeze too. And then you just need to set your theoretical target. You just need to take the high between the neckline and the head and project it to the point where we are breaking it. This set up to the upside, and look, so this is giving you your target. You just need to hold and put your stop loss below the right shoulder, okay, and holding it, and then bam, look at his market. Even if it's choppy, he's gonna hit your target. Another example right there, okay, left shoulder, head, right shoulder, neckline, wonderful neckline. You're just taking the high between the neckline and the head, you project it to the breakout of this inverse head and shoulders, and then he's giving you same your target. Another example right there, boom, okay, left shoulder, head, right shoulder, neckline. You're taking the high between the neckline and the head, you project it to the breakout, and bam, it's giving you again and again your target, okay, middle bound used as resistance and eventually broke out. Okay, another example, and maybe the last one, left shoulder, head, right shoulder, okay, then this neckline is breaking it right there. You're taking the high, and the high from this neckline to the head, you project it right there, and same, it's giving you, I think, yeah, 28, 27, or maybe 26, your theoretical target. So how to enter in this setup, okay? Of course, you need to wait in a conservative approach, this breakout, okay? So break above the neckline with volume, okay? And or wait a retest on this neckline, okay? This is the two ways to enter in this setup in a conservative way. All right, so then you just need to put your stop loss below the right shoulder, and the target, as I said, this is you project just the high from the neckline to the head and at the breakout, and then poop poop, and the market is gonna do his job. Another thing is if the right shoulder is very shallow, okay, shallow, so barely dips before turning up, it means that this market is extra bullish, okay, extra bullish. Buyers are extremely aggressive, so that's even better. All right, then you need to wait, of course, this volume confirmation. So volume should decline from left shoulder to right shoulder, and it means that selling exhausting itself, okay? The neckline breakout should spike in volume, and it means that institutional buying confirmed, and low volume breakout means that you need to be careful and caution about it, possible false breakout. Then the common mistakes about this setup is that buying before neckline breaks. So for example, on the right shoulder, so right there, for example, is a really aggressive approach, okay, but it offers you a better risk reward but a lower win rate. It's a trade ID until confirmed, okay, it's only a trade ID. Another mistake is that downward sloping neckline is actually more bullish. When it breaks, moves is more aggressive, okay? So it's more ideal that if the neckline is in a downward sloping. And one of the last mistakes is that don't confuse with triple bottom, okay? 3 equal lows, that's a triple bottom, and not an inverse head and shoulders, has a notably lower head, okay? This is it for this video. If I have to recap it, exhausted sellers, higher lows on right shoulder, okay, only on right shoulder, and then neckline break on volume at the end. All right, and this is your long opportunity on this market, okay? So if you liked it, don't forget to hit the thumbs up and subscribe to the YouTube channel, because I'm gonna post a lot of educational content, and don't forget to subscribe to this YouTube channel. So if you are curious to, make sure to watch it, the next videos, and I'll tell you, and I'll see you in the next one, or in live, or until in video right there. See you, take care, trade safe, and bye.
Yo, his name is Florian, he's the NASDAQ hustler. Every day he's grinding, making all them numbers cluster. He's a day trader, living life as a thrill seeker. Analyzing charts, he's the Wall Street sneaker. 9 to 5 ain't his game, it's the stock market flow. Tickers on his mind, watching those numbers grow, buy low, sell high, that's the name of